All right, guys, today we're going to talk about the Nokia stock. They just posted Q2 earnings yesterday and absolutely crushed it. So I wanted to jump on and give you an update on the Nokia stock, break down the chart, give you an idea of where I see it headed over the next couple of weeks based off the technicals. I'm also going to go over the discounted free cash flow sheet and give you my thoughts of what the Nokia stock price is currently worth as of today and where you should be looking to buy. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, guys, we're going to talk about the Nokia stock. I haven't made a video on this one for a couple of months. Today, I'm just going to focus on the earnings report they posted yesterday, and then we're going to go over the chart. I'm going to go over the technicals and give you my thoughts of where the Nokia stock price is headed from here. If you want to see me break down the fundamentals in a much more in-depth method, I will link those videos right here so you can go check those out. Guys, today we're just going to focus on price action. If you stick around till the end, I will give you an idea of where you should be looking to buy, put your stop loss, and what your profit targets are. I'm also going to go over the discounted free cash flow sheet just real quick to kind of give you the intrinsic value of what I think the Nokia stock price is worth today based off the cash flow. Real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come over and join us at the Patreon if you want to get all of our trade setups. And Day One Squad, I love you so much. Thank you for your support. But let's go ahead and get started. First thing, guys, this is the earnings report. Like I said, we're not going to spend a ton of time on it. Nokia stock jumped like 12% yesterday, guys, on this earnings report. People were very impressed with what they posted. As you can see here, guys, Q2 non-GAAP EPS, they posted 10 cents, and that is in euros, but it was a beat by 2 cents. When it comes to revenue, they posted 5.9 billion euros, which was 11.1% year over year, and was a beat by about 290 million. Guys, I think the big thing here with Nokia stock is not necessarily growth, right? They're not going to continue to grow at massive percentages. It's really all about them bringing up those bottom, end margins, profit margins, operating margins, cash flow conversions, cash flow margins. If they can continue to do that, I think the stock will do very well. If you look at, the previous macroeconomic conditions, just the supply constraints, the issues in the market, I think they have fared very well. And they surprised me with this earnings report. I didn't think that they were going to, post such strong numbers in Q2. And they also reaffirmed their forward 2022 guidance. As you can see here, guys, gross margins of 40.6% and an operating margin of 12.2%. And they're trying to get that operating margin up around 14% within the next year or so. As you can see, guys, on full year 2022, net sales outlook is 23.5 billion to 24.7 billion, with a comparable operating margin of 11 to 13.5%. So by the end of 2022, they could be just under 14% on their operating margin. I'm not going to go over this stuff, guys, when it comes to, their actual segments. You can obviously go take a look at that. But they are looking for a free cash flow of 25 to 55% when it comes to conversion on their comparable operating margin. So really strong stuff, guys, on their actual earnings and their forward guidance. Reaffirming those, forward numbers is very, very good. They also issued a dividend yesterday, so you definitely want to go check that out. If we jump over to the discounted free cash flow sheet, guys, you can see I've currently got them sitting at 3% in perpetuity when it comes to revenue growth. I don't think the revenue growth is really what we should be looking for. I think it's an increase of their bottom end. However, if we put their cash flow margin at 5%, which is they're currently doing 9%. So that is being pretty conservative. That only gives us about $3.10 when it comes to intrinsic value. So that's taking forward or future cash flows and discounting it back. You need about 40% downside from current levels. I do think that's a little bit conservative, guys, and I think that they are going to do really well when it comes to 5G. And they've just done such a good job at penetrating the market worldwide. They've done a lot of partnerships, and if they continue to buy back shares, I think they will do just fine. If we up that cash flow margin, guys, to 9%, you're getting $5.60. So about 9% upside from the current levels. If we increase that growth rate for the next 5 years to 4%, you're almost at $6. So I do think the $5, 15 cents, 15, 10 cents, whatever it is, where it's at right now is actually a pretty fair value. If we drop down to the PE, it's kind of like relative valuation based off competition. I've got ANET, Panasonic, Motorola, and Cisco. You can see, guys, based off all of their PEs averaged out, it's about 19.4. I do think that's a little rich. I would like to see Nokia's PE stay around that 15 level, which it's about right now, 15.7. So that would give you a price target of about $6.40 if you think they deserve, almost a 20 PE. So it really just comes down to what you think, guys. If you think they're going to continue to do well, improve their margins, continue to grow, continue to penetrate, then I think the current stock prices is just fine. I currently dollar cost average in it. It's in my dollar cost average portfolio. I've done fairly well with it. I think it's going to continue to do well. This is also a short-term swing trade play. I've made many videos about the chart, guys. More of a long-term position trade, not necessarily short-term. If we jump over to the chart, guys, the chart looks really good. We just had some major developments here. This is the daily. You can see we had that big inverse head and shoulders we've talked about. We just got back above that zone and back tested it, but it's really the weekly that we want to look at, right? If we take a look here, guys, look at the level that it just successfully back tested, literally for the first time since clear back here in like December of 2017, May 2019. Once it broke it though, right there in December, October 2019, it's had a hard time getting above it, but it recently did that back in May. So you can see how significant this level is, guys. Goes clear back to 1995, back tested it here in 1997, and then before it ran and went absolutely insane back here in 1998, right before the 2000 tech bubble. We've got the big bullish Gartley, guys, on the weekly with the momentum shifting structure at the pattern completion zone. And take a look, guys. We got back to the inflection zone. We broke it. We came back and back tested it not once, but twice. And on the second test, we actually broke the zone and then rallied above it. We had that spring. And if we can get that back test of spring, I think we are headed to much higher prices. So you get the spring, you get the back test of spring on the supply line, and you go straight to the next zone. So guys, this is absolutely what we could be seeing happening. I mean, you had the rally, right? Pull back, you had the first higher low, you had the rally, you had the second higher high than this high. Now you're creating that second higher low. So absolutely a change in trend. You had your supply line that goes clear back to September of 2014. You broke it, you back tested it, you broke it, and then you got back above it. So really good looking stuff here, guys. I absolutely think the next target from here, if it can hold above that 446, 450, it's like 450 to 480, which is this inflection zone. 640 is your first target. I mean, straight up, straight down. That's what it's pretty much done every other time. Straight up, straight down, 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 straight up, straight down. So guys, you hold above that level, you back test 480 successfully like it just did. I mean, look at the weekly, guys. It broke the 200-day moving average, got right back above it. You're starting to build fresh positive momentum for literally the first time since back here in January, and really any significant positive momentum back here in like September of 2021. So if that positive momentum is really going to start building, 640 is your next target, and then 831 after that. The 831, guys, is a very significant level from back here in May of 1998. It's also the high from back here in September, a low from back here in March 2009. So absolutely the next area. Take a look at your RSI, guys, on the weekly. Look at you just rejecting that bearish control zone. Every time you get back in it, you jump right back out of it. It just couldn't hold it underneath it, guys. Too much demand. There's not a lot of really thin order book in between these areas, guys. So that's why it goes straight from one zone to the next, right? You hold above the zone, you go straight to the next zone. So as long as you can hang on here, guys, I think you've got an awesome trade opportunity, because I mean, you jump in around here, you want to try to get in as close to, the zone as possible. You set your stop loss marginally under the inflection zone, and you set your target at, 640. And then you could even set a third one or a second one, like right there in the middle, 745 at these highs, and then 831. So really good looking stuff, guys. I love Nokia right here. This is exactly what you want to see. You have your big drawdown, then you make a harmonic, you make a higher low, higher low, higher low, higher high. I mean, really nice looking stuff, especially at such significant levels. Like, you can see how important this level is, guys. I mean, it's every time it's, broke it, jumped, back tested it, right to the next zone, broke it, right to the next zone. So it's really big developments have just currently happened. If we jump over to the monthly, guys, take a look at this. You started to try to build negative momentum. You already started to lose negative momentum. You've got your monthly RSI getting back above that neutral zone. Really strong stuff, guys. It's just a very powerful asset at these levels, and it has fared very well. As long as it can hang above 450 to 480, I think it's going to do just fine. If you break that, though, if you break 446, 450, you're headed back to 334 and then 244 after that. So if we jump back to the daily, guys, I also want to show you something. Actually, I think it might be the weekly. Yes, it is the weekly. Take a look at this hidden bullish divergence on both of your oscillators, guys. You've got from here to here, clear as day, hidden bullish divergence. From this low to this low, you had a higher low on price and a substantially lower low on your oscillators. That is implying a continuation to the upside. Very nice, guys. So if this hidden bullish divergence plays out on both oscillators, you're absolutely headed back to 640. So let me know what you think down in the comments, guys. This video is for entertainment purposes only. Obviously, I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. But let me know what you think down in the comments. If you agree with my analysis, if you own it, I'd love to hear about it. And I'll see you guys in the next one. Peace.